The year 2024 ended on a high note. The S&P 500, a barometer of American business, soared to a record 6,032 in December. Investors were ecstatic. The good times seemed unstoppable. Money poured into the market. Retirement accounts swelled, confidence was sky high, but cracks were already appearing. Technical analysts, those who study charts for clues, saw warning signs. The market's upward momentum was slowing. A pattern called a rising wedge emerged, often a precursor to a fall. Still, most investors remained bullish, caught up in the euphoria. The first 2 months of 2025 saw the market continue to climb. However, beneath the surface, structural weaknesses were becoming apparent. The stage was set for a dramatic reversal of fortune. The correction began in April 2025. It was triggered by an unexpected event, Trump Liberation Day. On this day, the former president, seeking to revive his America First agenda, slapped tariffs on goods from Canada and Mexico. The markets were blindsided. Panic selling ensued. The tariffs, initially intended to renegotiate trade deals, quickly escalated into a full-blown trade war. China retaliated with tariffs of its own. Global supply chains, already strained, were thrown into disarray. The markets went into free fall. The Dow Jones Industrial Average, another major market index, tumbled over 1,200 points in a single day. The tech-heavy Nasdaq Composite fared even worse, plummeting 20% from its recent highs. Fear and uncertainty gripped investors worldwide. The trade war was the catalyst, but other worries were brewing. Inflation, dormant for years, was rearing its ugly head. Prices for everyday goods were rising, eroding consumer purchasing power. The Federal Reserve, tasked with keeping inflation in check, hinted at raising interest rates. Higher rates make it more expensive to borrow money, potentially slowing economic growth. Adding to the anxiety was a string of disappointing corporate earnings reports. Companies, grappling with higher input costs due to tariffs, saw their profits shrink. Apple, a bellwether for the tech sector, missed its revenue targets for the first time in years. The markets, already on edge, reacted sharply to any negative news. The volatility was breathtaking. Wild swings became the norm. The Dow would plunge hundreds of points one day, only to rebound the next. Investors, whipsawed by the turbulence, didn't know what to make of it. Many panicked and sold their holdings, further fueling the decline. As of today, April 24, 2025, the S&P 500 sits at 5,151, down over 16% from its December peak. The correction has been swift and brutal. The market is testing a key support level. If it breaks below 5,030, we could see further declines. Some analysts believe the market could fall as low as 4,834 before finding a bottom. The road ahead is uncertain. The trade war shows no signs of abating. Inflation remains a concern. The Federal Reserve is caught between a rock and a hard place. Raise rates too quickly and risk a recession. Keep them low and risk runaway inflation. Investors are left to navigate this treacherous landscape. What's an investor to do? Don't panic. Corrections are a normal part of the market cycle. Stay focused on your long-term goals. Consider rebalancing your portfolio. And remember, as always, buy low, sell high. Easier said than done, but that's the name of the game on Wall Street.